Thank you very much for staying on the marketplace. Welcome back. Now, it appears the cedi's recent firm stability against the US dollar might be ending after observing the local currency's performance over the past 5 weeks. George Rafi tells us more.
Joy Business is learning the sustained drop in the cedi's value on the interbank market can be attributed to the shortfall in dollar inflows, especially from foreign investors. Some market analysts say was influenced by delays in communicating Ghana's decision on the extension of the IMF program. There's also a surge in demand by some businesses for dollars to finance their imports, but there appears to be limited supply on the market. Analysts say the Bank of Ghana's decision to stop the dollar auctions, or call it a well-structured form of selling dollars to commercial banks, could also be a contributing factor, forcing most of the commercial banks to turn to the big gold producers in the country as their major source of dollar supply. Some of these banks, 3 weeks ago, were quoting the dollar at 4 Ghana cedis, 42 pesos. But as of last Friday, you will need 4 Ghana cedis, 33 pesos, to get a dollar from some of the major commercial banks. For some, it is clear the city's good run experience in April and early May has ended. However, some market watchers maintain that there is nowhere in the world where a currency witnessed full stability over a long period. Therefore, these marginal blips are expected. But others are of the view that when these blips are sustained, then there should be some response from managers of the monetary space.
It's on the marketplace, and some commercial banks say the policy rate cut would not be the only factor that should result in significant interest rate reduction. Certain banks are yet to respond to the 300 basis points policy rate drop since the beginning of the year. Analysts have described it as the biggest reduction in the Bank of Ghana's key lending rates in a year. Meanwhile, some businesses have told Joy Business they are even paying more interest on exiting and fresh loans. Managing Director of HFC Bank, Robert Lehand, has attempted giving answers on why interest rates are still high.
Affects a bank really is the cost that they have to borrow money from the general public. Or as I said before, how much you buy money from the general public. And as such, until such time that the rates to the general public or deposit rates come down, which is a little lag effect because people have their monies on fixed deposits. And until that filters into the banking system, the interest rates or our interest expense is still what it is. The cost of running the bank, paying salaries, paying rents, our operating costs is still what it is. So from an expense perspective, that base rate dropping does nothing to change the expense that a commercial bank and all commercial banks are actually carrying.
So what do you want? Because there are some who have argued that maybe the banks prefer to shift the goalposts even when base rates or policy rate goes down significantly. We saw treasury bill rates also going down slightly a little bit. Why are all these indicators impacting on that real cost of funds of these financial institutions?
What impacts on the banks is the cost that you have to buy the money from the public. And therefore, what will happen is that there is a definite lag effect that for the banks in buying the money from the general public or the cost of fixed deposits that are presently out there. So what you need to ask is if, for example, someone is still or banks still have to pay in the vicinity of 20% for deposits, right? It is difficult for them to have to pay that rate and still drop their rates on their lending side.
The Public Utilities Regulatory Commission, PURC, says it cannot directly publish online the formula for establishing electricity bills. This follows the call by the Energy Minister Boakye Jakon for the Commission to publish the methodology on its website to ensure more transparency in the tariff setting process.
The Energy Minister made the call during the National Policy Summit in the month of May. This, according to him, should make it possible for consumers on their own to ascertain how much they are to pay per their consumption levels. But the PURC says it is not within its purview because the final billing of consumers entails other factors which it has no control over. The Executive Secretary, Samuel Sapong, explains to Joy Business the Commission can only rather task ECG and other power distribution companies to do so.
He's talking about a bill, but a bill is issued by the ECG or the distribution company. So it's the distribution companies who should put it on their website because we don't control like taxes and levies.
But you control the price, and
you control tariff portion. But remember, what is on your bill is not only tariff; it's made up of taxes and levies. So they have to do the build-up to arrive at your bill.
So you mean that it should be a call to the ECG and not the PU?
We always ask them yes, because they do, anytime they come up with a tariff, they do something called Recona. Recona, which they publish. We don't publish Recona. Recona is published by ECG. So we expect them that, what the minister called, they should put that Recona on their website.
But isn't that the mandate of the PURC? I'm talking about compelling the ECG, for instance.
That one is a mandate.
Yeah.
We have asked them based on that for them to put it on their website.
Meanwhile, the regulator of the power sector has for some time now not made public its quarterly review of electricity tariffs. Mr. Sapon attributes this to an ongoing review of the formula for the power distributors.
Because we are doing a study, the study will end, and so we need the outcome of the study as a basis for reviewing of the tariffs.
So since when have you halted the...
We haven't halted. We've been doing, except that the net effect has been zero. We have the documentation, we file it, we gazette it.
But you don't communicate?
Well, the net effect is zero, so there's no point in usually communicating.
Because you made people aware that every quarter, no matter what happens, you communicate.
All those are being gazetted. If you can come to the office for copies, or even our website. You have to look at it from perspective of what tariff you use. And also changes in generation mix. There are so many factors. So one component, you can't use one component as a basis for judging. We look at the net effect of all those changes.
Away from that, consumers of Farm Milk Limited have an opportunity to experience the newest addition to the FAN products. FAN marks as a new way by the company to introduce the product to customers. This follows a media and stakeholder launch of the new product, which was unveiled last month by the Trade Minister, Alan Chemanting. Marketing Manager of FAN Milk Limited, Gifty Ajefianko, expresses delight with the level of acceptance of the new product on the market.
New Fan Max is a creamy yogurt enriched with vitamins and a good source of calcium. The product was developed based on recent consumer insights and the clear need for innovative opportunities to consume healthy, nourishing dairy products. Marketing Manager of Fan Milk Limited, Gifty Ajefianko, noted product is already accepted on the Ghanaian market.
As a listening company, we listened to what our consumers were telling us, and we brought Fan Max. It is down to them already. A lot of people are fueling their day with Fan Max. We have moved from our internal staff to the traders who are our trade partners, and we have also engaged the media across various platforms, and currently we are engaging consumers, and it has been very well received. For now, it's for the Ghanaian market, but we have ambition to grow beyond Ghana. Currently, it is the very first innovation that has come to Ghana in Africa, and even all our other countries within the Fan Milk network. Ghana is the first place to have Fan Max.
Some consumers who had the opportunity to experience the product also shared their thoughts with Joy Business.
The Fan Max is very nice. The vanilla flavor is very, very good. And it's very rich, creamy. And so what difference can you tell us about this drink as compared to other drinks that you take? Oh, this one is very rich. It's this one is very, very rich. It's creamy also.
Oh my God, it's really fantastic. It's delicious. I love it. Both taste, I mean, great. The two flavor.
Oh, the drink is very nice. It's a very new brand. They've introduced to the system. One feature I've seen about this drink is that you can consume as much as you can, but it does not have any side effects as compared to other drinks that we've tasted before. It's very nice, and it's a very nice brand, and it tastes great.
You're still live on the marketplace. Let's now cross over to do some stock market analysis. And the capital market is expected to be relatively stable, but with slightly bearish outlook. The commodities market is also likely to experience some movement, with the most in crude oil prices. The currency market is expected to be stable. And let's now go on to the phone lines now and speak with research analyst and also investment analyst Aseye Akotia of Nordia Capital on phone to tell us more about how the market opened today, the stocks, the currencies, the commodities, and of course taking a retrospective look at how it ended last Friday, and then make some projections. Good afternoon, sir. Welcome to the market, please.
Thanks for having me.
All right. Now, so before we look at how the market opened today, can you give us some retrospective look on Friday, how it closed?
Well, Friday was an exciting day on the capital market. We had two major block trades, and that's in Ghana Commercial Bank and Total Ghana Limited. And we have block trades in the banking stock and the petroleum stock. It shows some level of diversity on the market and some activity on the market as well. And also during last week, I think midweek, we had a block trade in Guinness Ghana Brew Limited as well. So last week was a good week for the market in terms of trade volumes. However, the market dipped slightly as compared to the previous trading week.
How was the composite index like?
The composite index dipped slightly, like I said, that's week on week. And the year-to-date dipped as well, but not too much.
Okay.
For the financial stock index remains the same, but the GSE composite index year-to-date remained at 13.61%.
All right. So how did the market open this morning?
This morning we've seen some bids and offers on the market. The likes of Standard Chartered Bank started very strongly, and we had SG, SSB as well, and Trust Bank, all with outstanding bids as we speak. And we have the likes of Mechanical Lloyd and SIC and Unilever with some outstanding offers. So it seems like a relatively balanced market today. At close of day, however, we expect the banking stocks to tip the scales on a bit of a positive outlook. But looking at the week, we expect a slight dip. Usually, when you come out of a week that had major block trades and in two different industries, being the banking stocks and the petroleum stocks, and you also had a high capitalized stock like Total Ghana Limited, ending with outstanding offers, we expect the week generally, by the end of this week, to have a slight dip as it was last week.
Now, are we expecting, you mentioned the petroleum stocks, are we expecting the stocks to respond to the slightly improved performance of petroleum and crude oil prices on the international markets?
It could. The prices of crude oil on the international market as against the prices we have here, usually there's a bit of a lag to see that response in what we have on our market here. We don't expect what we are seeing immediately to have an effect. As in, you don't expect Total to just turn its fortunes and have outstanding bids as against the offers it ended with the end of last week. It might take a few weeks or even a month before you actually see the full effect of what you're seeing on the international market on the capital market.
So which other stocks should investors look out for in the course of this week?
Like I said earlier, we had both an SGSSB. I think the investors can also continue looking at Ghana Commercial Bank. There was a block trade that ended the banking stocks activities last week, but it started strongly as well. And also, the investors can go ahead and look at Farmwork Limited. Farmwork Limited has started the week also very positively with high outstanding bid offers. So you can look at Farmwork also as a pick for the week.
Now, what about the commodities, the international commodities, the cocoa? We talked about oil before, but cocoa and the others, how are they faring?
So cocoa started the week on a bit of a weak note. I think we're still experiencing the spillage of the excess supply. Cote d'Ivoire had a bit of a harvest, and when you have a supply of cocoa like this on the international market, you don't expect the price to continue an upward run. So we expect cocoa to be relatively stable, but outlook for me would be taking a slight dip on the international market. For gold, it's still having an effect of the Asian market cutting back on the kind of demand they want for the precious metal. However, we expect that those will be relatively stable, because if you compare the growth, especially in China last month as against what you're seeing so far this month, it hasn't dipped much, so we expect gold also to be relatively stable.
Now, if the current collaboration between Cote d'Ivoire and Ghana with regards to controlling prices of cocoa should have anything to go by, would it impact positively on the market, these particular stocks, or for the commodities?
Yes, that's Ghana and Cote d'Ivoire. I think it's about time indeed we really take the collaboration seriously. That's in effect what OPEC does to the prices of crude oil. They control the kind of supply you have on the international market. So by extension, they determine the pricing. If Ghana and Cote d'Ivoire, which are two major blocks on the market, are able to control the kind of supply and demand of cocoa, I think by far we can have our destiny in our own hands.
Now let's look at the currencies. How is the Ghana cedi faring against the US dollar? Earlier we heard that the trend, the appreciation trend, or the slight improvement that has taken place over the past 5 weeks has witnessed a downward or a reversal of the path. How is it faring today?
Today, it's not too different like as it ended last week. Like you rightly said, we experienced a bit of an upward run for some weeks. For the past couple of weeks, things seem to have slowed down a bit. But last week was relatively better than the week before. And as it ended, like I said, too different from what it ended last week. We expect this week to follow in a similar trend on the back of the bond that was just issued as a 3-year bond. We're still waiting for the statistical bulletin from the issuers, after which will be clear how much foreign funds were part or was part of the 3-year bond. If you indeed have a lot of dollars chasing our bonds, like we've experienced in the past couple of months, I expect the cedi to have a bit of a whirlwind taking it upwards. So 4.2 by the end of this week, I don't think will be far-fetched.
Very good. Now, finally, before we finish with the stock exchange, how is it faring with the other currencies as well, apart from the dollar?
Okay, for the other currencies, the dollar is the major trading currency, so most of the activity you see will be in dollar. For the euro and as well as the pound, it's also relatively stable, about 4.83 as last week. We expect this week not to be too different. Even though some issues coming in major European economies, like what we saw, the attacks on London, we don't expect that to have too much an effect on the economy, because we know that these are things that happen once in a while. We also expect, like I said, the pound will be relatively stable. End of the week last week, about 5.52 cedis to £1. We expect this week to be quite similar, quite stable as compared to last week.
Let's now turn attention to the alternative exchange market, the GAX market. What are the stocks? How are the stocks doing on that market?
The GAX market is relatively, the GAX market came about to help low-cap companies get some activity on the stock exchange. I don't think that expectation has rightly been met, but in recent times, we have a few more listings on the gas market. And looking at last week, you had the likes of Samba and Co. with outstanding bids. And if this continues this week, and indeed some activity happens there, I expect the activity to be upward. I expect the activity to be bullish. So any activity in the gas market this week, I expect it to add up to the exchange.
Do we see the vibrancy that we've witnessed with regards to the hot stocks and as well as the intravenous infusions?
Can you say that again?
I'm asking whether we've seen the vibrancy maintained, the vibrancy in HOTS or with HOTS stocks and intravenous on the GAX market.
Yes, you can say so. They ended, even this week, if you look at the bids in office, as you see, we have good bids and really no offers. And so you realize that people people are willing to buy, but not enough on the market. So it's a good thing, but you need the market to be active to attract more people. You don't just buy and hold. So if you see some supplies on the market, then the splits that you see will reflect in upward price runs. And when the upward price runs happen, then you have more investors looking the way of the alternative market as well. But so far so good. This week, like I said, it started on more bids as against no offers on the market. And so we expect the alternative market also to end this week positively, if there should be some activity there.
All right, so half year is almost ending, and how would you assess the performance of the stock market 6 months down the line, begin from the beginning of the year?
It's been fantastic. We've come from 2 years or so back-to-back negative returns on the stock market, and we already have a year-to-date on the general index that is 13.61%, on the financial stocks index 16.23%. If you analyze this, there's no money market instrument that could give you the kind of returns that you're seeing. And you also almost see week in, week out block trades that shows activity on the capital market. So half a year, I think that we have not been disappointed. It's been a good run so far on the capital market, and we are hopeful that quarter on quarter stocks, the listed companies will show good earnings that will propel this activity for the market to end even on a brighter note by end of this year.
Many thanks for your time. Asei Akotia. Asei Akotia is an investment and stock market analyst with Nordia Capital. He's been telling us about the performance of the stock market and what to expect in the coming weeks. Now, in the next couple of weeks, we will be giving you some investment advice from courtesy Daffin Finance. They will be easy to understand tips which will impact savings and investments culture. Here's the first one.
Investment tip is brought to you by Daffin Finance. Deposit, investment, borrowing advisory.
Your age and the size of your income should not discourage you from setting money aside every month for investments. The size of your future investment is directly related to the length and frequency of your investment. Develop your budget to know how much you can invest every month.
Investment tip was brought to you by Daffin Finance. Deposit, investment, borrowing advisory.
So on the marketplace, let's now help you with how much you have to pay for some selected commodities for the week. All right, so this is how you hope to be paying for the selected commodities that we just showed you, and it's always on the marketplace. And this is where we draw the curtains down on this afternoon's edition. My name is Emmanuel Abwaji. Hope you enjoyed this edition, and good afternoon.